Hello and welcome to Look Ahead, where we'll discuss key economic, corporate and political events, as well as important price levels that could drive the markets this week. Now, most of you know Jasper Lawler, our LCG's senior market analyst, but this is my first time on Week Ahead. I'm Kelly O'Byrne and I work on the dealing desk here at LCG. Mostly I'm sitting in front of 6 screens, executing orders as well as monitoring our client book. But now here I am with Jasper. And enough about me, just to share what will hopefully be some useful insight. Jasper, obviously we have to start with the UK general election. On the desk we're seeing some interest pick up in the pound. Is that no surprise?
No surprise really, Kelly. And may I also just say, welcome. I'm pretty glad to have Kelly here because I think it will bring a bit of a more kind of granular trading look at things rather than just my viewing of the markets and the news. So glad to have you here. It's the election week, isn't it? So I can imagine volumes on the pound are going to just keep picking up as people place their bets. At the moment, it looks like the Tories are odds on to win it, right? And I think that goes a long way to explain why we clipped 7,600 in the FTSE last week as well. And I think probably one interesting story is that even though the pound has been stuttering around that 130 mark against the dollar, it's not proving to be such an important factor for the FTSE. So maybe a big Tory win, if there is a landslide, which is slightly less expected now because of the tighter polls, that could cause a jump in the FTSE rather than a drop, which you would expect more recently because of that inverse relationship with the pound.
Okay. And I've been speaking to people about the banks. How do you see them faring post-election? And also other sectors too?
I think the banks are that kind of major macro play on the economy. And so generally speaking, Conservatives viewed as the more kind of market economy friendly party. And my take on it being completely politically neutral here, but just looking at realistically what people are going to focus on, I think probably the Tories have the edge in terms of people's confidence on the economy. It's still the biggest thing that people choose to vote around. And so probably why I'm expecting still the Conservatives to win it. And if that's your general take that Conservatives are good for the economy, better for the Brexit negotiations, etc., more stable situation in which maybe the Bank of England can raise rates eventually, then the banks are going to be the biggest beneficiaries there. So I'd expect the banks to be some of the top risers, particularly if we've got a Tory landslide. Other sectors, one that's a bit of a tough one is the utilities, just because they've been under the cosh from both parties. So probably for them, actually, a hung parliament might even be the best result, because that way, then maybe there'll be a delayed decision on nationalising it, as Labour would want, or capping the prices like the Tories want. In terms of really negative fallout sectors, I think probably house builders are going to they were the biggest fallers after Brexit. So if we got a shock result, maybe a hung parliament or a Labour victory, I'd imagine house builders would probably be a sector that comes under the cosh a bit.
Okay. I noticed gold trading volumes were higher than usual this week, or last week even. Is that a haven play before the election or something else?
I think we saw the effect of Brexit on gold. So I think you can't dismiss that there's a relationship there. And even though we've seen actually the US dollar strengthen a bit, gold has actually held its strength relatively well. This seemed like maybe at the end of last week, there was a bit of a kind of topping sign in gold. So maybe the closer we get to the election, the more confident people are getting in the UK election result, maybe gold is poised to roll over. I would imagine a strong Tory victory to be a gold negative event because it's generally perceived as market friendly. But you can imagine that gold, the way it's done well recently, this year even, is just, even though the market keeps ticking higher, people want hedges because it's got to drop at some point, and gold is just a kind of natural hedge to go for. So maybe the fallout's not going to be too much.
Okay, well, also on Thursday, we have the ECB meeting. Will they change anything, or will it be like the last couple of meetings with the euro spike, but then finishing where it started?
Yeah, it's a big day, the ECB and general election. Euro sterling will be flying around, I would imagine, more so than normal. I don't think even though my general take is that the euro is destined higher because the ECB is going to have to acknowledge the higher inflation at some point. I don't think this meeting is probably it. I think based on their recent speeches from Draghi and the other ECB members, probably they're going to keep talking about the fact that inflation is, this rise in inflation is transitory. There's no underlying inflation that justifies them stopping the QE program. So all being said, obviously it will kind of depend on the press conference as normal. I don't think policy is going to change. I would expect them to lean on the dovish side, and the euro probably ends up having a normal chop around day, as you said, but maybe ending marginally lower.
Great. So before we round things up, it would be remiss not to mention it. What's the current state of Trumpflation at the moment?
Well, it's interesting at the end of last week when obviously he dumped the Paris Climate Accord to almost universal damnation across the press and across business leaders. But the markets rose, and we saw the first record finishing close for the Dow on the Thursday that it's been for a while. So big industrial stocks, which have been lagging technology stocks. So because the NASDAQ's so heavily concentrated with the big tech stocks, it's been outperforming, whereas the Dow's been kind of falling behind. Those big industrial companies, which probably are the biggest beneficiaries from less climate regulation, they all did well. And actually the stock market reaction globally was pretty positive. And so I think that was just an incidental, one-off thing. I don't expect climate to be an ongoing effect on the stock market, but I think anything that kind of distracts from impeachment, anything that sees him putting some of his agenda through, just makes tax reform and infrastructure and all the rest of it just a bit more likely.
Thanks very much, Jasper. That's all we have time for now, but before we go, Jasper's holding his usual Monday charting webinar, as well as a special election webinar on Wednesday at 12:30. That's London time. And don't forget to follow us on social media to get all the latest updates as they happen. Thanks and best of luck trading.